Hey guys, it's Steven. I'm going to show you two ways today to use a very simple tool to get into a stock as well as get out of a stock. So if you've ever had a stock make a big move and you thought that you missed the move, this is the tool that you're going to want to use. I'm going to show you exactly how to get that second chance entry with an extremely simple Fibonacci retracement. And we're going to get rid of all the other Fibonacci lines except for just that 50% line. And I'll show you how to do that as well. As you guys know, stocks rarely move just straight up or straight down. Even in a powerful trend, a stock is going to be doing this as it moves higher or this as it moves lower. Professional traders and the big money relies on these pullbacks to get in and out of positions. But why is that 50% level so important and special? And how can you use that in your trading? What's interesting is that 50% level that's in the Fibonacci tool isn't even actually a Fibonacci number. But when the Fibonacci tool was being developed, one of the famous developers of the Fibonacci retracement in stocks was someone named Gann. W.D. Gann developed several ratios that traders still use today. And one of those ratios and tools was this Fibonacci sequence. And Gann noticed that often retracements were to a 50% level. And so he included that in the Fibonacci tool that we still use today for trading. It's not some magical number. It's really psychological. But what has happened over the years is that 50% number has gotten coded into algorithms so that the big money use it. And it's become almost a self-fulfilling prophecy in a lot of retracement trades. Liquidity gets added at Fibonacci levels by big money. And with the proliferation of trading tools like TradingView, this 50% level is easy to place on a chart. The trick is knowing exactly where to identify the 50% level. And that's what we're going to do right now. We're literally going to look at two applications that took place today for the Fibonacci 50% level, one to enter a trade and one to exit a trade. So this is a chart of the Qs on the 2-minute. And this is this morning. The only other line I have on here is the 20 simple moving average. If you missed the big move this morning, and this was based on Microsoft and Meta earnings, there was a huge gap at the open. If you go over to the left, again in TradingView, but it's Fibonacci numbers are available on basically any charting platform. If you click into Fibonacci retracement, start at yesterday's close and move up to the opening this morning, this is what it's going to look like when you draw in those Fibonacci numbers. We're going to make this super simple. I'm going to go to settings. I still have this clicked. If I click off, the settings disappear, but I can click back in. I can go to settings and literally click off everything except for the 1, the 0.5, and the 0, and just hit OK. And now I've got my 50% line. So if you missed this gap, right, you weren't long, but you wanted to get long because of those blowout earnings, this is the level you're going to look for the retracement. And as you notice, the market opened. We had a really strong pullback. We came exactly to that 50% level, and that's where the turn was, right? So if you missed and you wanted to get long, that 50% retracement of the move, right? We had this big move higher. If you weren't in it before the earnings announcements last night from Meta and Microsoft, you missed this gap higher, but then there was a retracement of the move. So we had this retracement lower, and it retraced again right to that 50% level. So if you wanted to get long, but you missed, there's your retracement. I use Fibonacci levels basically all day long. Anytime I see a decent sized move take place in a stock, whenever we have a gap like this in the morning, I'm looking usually for a couple of things. One is a retracement to the 20, but even before that retracement to the 20 on a strong move higher, you often get a retracement of 50% of the move higher. And that's where you can look to get into the stock. Again, this is the cues on a 2-minute chart. That's how to use that Fibonacci retracement for an entry. But you can also use the Fibonacci retracement to give you an idea of where to exit a stock. And that's what I'm going to show you now. So I'm going to remove the Fibonacci's and these lines from my chart. I'm going to go to a little bit later in the day. As you can see, we had this downtrend going on, and one of the trades that I use and that I've done in another video, which I'll link to in the comments, is in a trend, and in this case, again, a downtrend. You get a power move back above the 20. Again, the 20 simple moving average on this chart, that's the red line. When you get that power move, and it can be one bar or a combination of a couple of bars, and then a base, and this is exactly what happened today, was this setup. This is this reversal setup. Power move, base, and now where am I looking to exit? One thing I'm going to look at, I'm going to look left and see this resistance area, which I'll draw across. So that's one thing I'm looking at, is a target, and it's not, right, it's not a big move in the Qs. But if you're trading Q futures or you're trading options, it's not a bad move either. You're talking about a little less than $1 in the Qs, which again translates to a decent amount if you're talking futures or options. So that's one thing I'm looking at, and one thing that sets up a price target for me. The other thing that I'm going to look at, and I'm going to make the chart a little smaller to put this in, is I'm going to put on those Fibonacci lines again from the top down to the bottom of this move. Remember, the Fibonacci lines, you want to start them at the beginning of the move down to the end of the move, because we're looking for a retracement of the move. This time, since I'm now long the stock, I'm looking for a target to exit. I'm not using Fibonacci's here to enter. I'm using them to exit, or to give me an area where I'm going to move my stop and tighten it up. I've already got that resistance line, and now that Fibonacci line, which turns out to be right at that resistance line, gives me another indicator to stack and know that that's an area where I want to look to exit. And as you can see, the Qs got to that 50% level, and I'll make it bigger so we can see exactly what it did. It got right to that 50% level, which was also that resistance level, and turned and moved lower. And that was the end of the reversal of this trend. So can you use the Fibonacci 50% retracement, not only in Qs, but in stocks, in Forex, and in crypto? This number works, and the answer is yes. This Fibonacci retracement works in all markets. Algorithms are set up to trade against this 50% retracement level on the Fibonacci's. So this is a tool that you can use over and over, no matter what asset class you're trading. So now you've got a powerful tool, both to get you into and out of whatever you're trading. As you saw, you can combine it with other technical indicators such as support and resistance, which I'm always big on, support and resistance. and knowing where those levels are. And if you strip out all of the other Fibonacci numbers besides just that 50% retracement, you get a really clean looking chart to trade that level against. So I hope this Fibonacci retracement video helps you in your trading. If you want a copy of the cheat sheet that shows exactly how I do this trade setup, this reversal trade setup, just comment stock in the comments below, and I'll send you that cheat sheet around this particular trade and what this setup looks like. And now you have another way to exit this reversal trade once you're in it. So again, just type stock in the comments below and I'll send you that for free. If you enjoyed this video, please hit like and subscribe, and I'll keep making technical analysis videos like this. Thanks for watching.